Let's keep it more with earnings. Britannia is celebrating 100 years of inception, and we decided to catch up with the management to talk about the roadmap and the new and upcoming offerings. My colleague Mubina Kapasi caught up with MD Varun at an event in Kolkata amid all that talk about the consumption play coming back. She began by asking him how the foods major plans to kickstart a new century.
Well, yeah. So what we want to do is we want to create a total foods company. And certainly with the kind of brands that we have, I do think we have a right to succeed in a lot more categories which are outside of our core. And that's going to take us to, that's going to be our credo for the next century. So we are not 100 years old, we are 100 years young. We want to make sure that we bring a lot of energy to taking our business to a lot of unknown territories. These unknown territories could be within bakery, could be outside bakery, but certainly within macro snacks. And also we are looking at expanding our footprint internationally. So it's going to be a very exciting phase. I personally am very, very excited about the entire strategic framework that we've been able to develop at Britannia. And we've got a complete buy-in from our board as well. So we are looking forward to the next century.
Okay, it's uncharted territory for you. Up until now, your focus and your expertise has been, of course, in biscuits business, while you have, of course, had about 20 to 30% coming from non-biscuits as well. But still, it's going to be a little tough. You're going to be entering uncharted territories. So what's the plan on how you plan to push the non-biscuits businesses as you enter newer products, newer categories? How do you plan to push those products to the consumer? How do you plan to relay the Britannia brand with those products? Because, I mean, Britannia means biscuits.
Well, yes, but you got to understand the way we are thinking is we're thinking like concentric circles, right? So 6 years back, we decided that it wasn't the right time for us to be in so many new categories. So we consolidated. We said if we have we are as solid as our base business. So we consolidated. There were some categories that we were in, and we decided to exit those categories because we wanted to really strengthen our biscuit business, which was a little unstable at that point in time. So there's a time for everything. Today we feel we are very solid as far as our base business is concerned. So we can be a little bold, we can be a little adventurous, and hence, the confidence to get into new territories. Yes, if you take aim and you want to hit a target, you will not hit every bullet into the bullseye, and that we understand that every product that we launch is not going to be successful. But the concentric circles are going to start with our core. So there is going to be a lot of innovation which is going to happen in the territories that we already operate, but completely new products and formats. So within biscuits, if you've tried Deuce, which is a chocolate slab on a biscuit, is completely new territory. Similarly, we are going to look at other biscuit categories also, which are hybrid categories. In cakes, we are a very basic cake business. So we are looking at bringing in some very, very interesting value-added cake products in the next 4 to 5 months. Similarly, in rusk, in dairy, we are looking at bringing in some highly value-added products. So this is how the concentric circle works. Fill up the gaps within the categories that you operate in, and then start to move outwards. And then we are looking at, within bakery, if you take bakery as a concentric circle, there are a lot of gaps, right? There are gaps, croissants, that's a completely white territory in India, and we've got a joint venture there. There are bars, there are, a whole lot of other things which are gaps within bakery. So we are going to look at fulfilling those gaps.
And I'm assuming the fact that you've as your strategy, concentric circles mean there may be some synergies as well between your operations?
So if you're looking at bakery, business is the same, right? So you're looking at building a business which is different, but still the core is the same. And then we move outwards to other categories which are outside of bakery, which could be, in the macro snacking category. And I can't discuss what, but you'll know soon enough.
So can we expect a launch in that category in the next 1 year or 2 years?
Yes, for sure.
Okay.
For sure.
Okay. All right. If I have to also talk about a moat that Britannia may have created, yes, you know, and interestingly, I was reading one of your interviews where we spoke about brand equity. It's something that should hold, you know, a brand should have a certain amount of equity. So if I have to talk about a moat that Britannia has, because at the end of the day, biscuits is a bit of a commoditized company and it's only hardcore innovations which you guys have so far been excelling. But if I have to talk about a moat, what would that be? Because innovations, I mean, even for example, your competitors have come out with all kind of differentiated cookies, so on and so forth, you know. So if I have to talk about a moat for Britannia, what would that be?
So there are two moats for Britannia. The first moat is the brand itself. And in my 30 years plus of experience within the consumer industry, what I've seen is that you can do a lot of stuff, but you can't build brands in a hurry. So that's a big moat, and I think that's something that no one can match. The second moat that we have is about being a low-cost operator. I don't think that there is any company which operates with the kind of costs that we operate. Okay. So while we make a not so healthy gross margin, we make a very healthy net margin because our fixed costs are reasonably low, right? So that really, those are the two moats that we think we have, you know, completely built around our business, and we will continue to strengthen them as we go forward.
Yeah. I'm going to ask you about your Q1 numbers now. Your stock as well soared to new highs on account of that. Strong numbers. Top line certainly did impress the street a lot, almost 14-15% odd. I know you do not give out this number very often in the press, but I'm going to take my chances volumes because that's the key parameter.
No, I give volume numbers.
Okay,
so volumes have been pretty good. So domestic volumes have grown by almost 12.5%. And overall volumes have grown 12%, and this is the third quarter of double-digit volume growth. So it's looking good. I feel very positive about the way we are, you know, moving forward. And frankly, I've been dreaming about double-digit volume growth for a long time, and now we've done it 3 quarters running.
But you don't believe this is on account of a low base, or?
It is. So there's a little bit of that, but I do think that the momentum should continue to an extent. The last 2 years have been a little disturbed, as you know, because of demonetization and GST implementation. But I do think that you know, this momentum will continue. So I think this could be our first you know, year of double-digit volume growth. So I'm hoping. I've got my fingers crossed.
And so have your investors, I'm sure. Yeah. You know, Mr. Berry, from whatever I've researched and read about you, I know for a fact that you've not only looked at a brand from what kind of revenues it earns you, but also I think margins and profitability, yes. Which brings me to my next question. Gross margins, like you said, you may not be at the top compared to the industry, but EBITDA margins, again, you know, you've done very well over there. Are you seeing support, however, still coming in from benign raw materials? Because from what I understand, flour prices, sugar prices, milk, of course, because of which the whole crisis took place, have all been very low. I mean, they've been in that deflationary trend of sorts. So you've been getting support from there as well? Well,
the commodity basket has been flat, right? So versus last year, there's not been too much of inflation till now. But now we've started to see with, you know, the MSPs increasing, the government increasing the MSPs and OMSs. So there is now an inflation which is coming in, which is of a fairly large number, which is, so I do think that, you know, now the inflation, now onwards, it will be a slightly larger inflation. And hence, see, you've got to understand one thing, that we don't get support from, you know, let's say raw material prices. And why don't we get support? Because if there is no inflation, we don't take pricing. Correct. Right? Which is pretty evident from our results, right? If we are growing volumes at 12.5% and, you know, total, there's hardly any price. There's only a little bit of mix change and, you know, the rest is all volumes. So we don't take the prices up. When there is an inflationary trend, we will be forced to take prices up. So the delta between the volume growth and the revenue growth widens a bit. So that really is what happens. So as we go forward, maybe that delta widens a bit. But you're confident of maintaining margins, at least the margin expansion trajectory? Well, you know, we will certainly try our best. You know, we've done it in the past. We've seen inflationary trends in the past as well. So we are hopeful that we'll be able to do that.
Okay, just the last couple of questions before I wind out. Dairy. You know, Britannia is a brand we've had very high hopes always, but for dairy business, it's not picked up the way one would have expected. You've lost a bit of market share in cheese, you know, to your peers, etc. How did dairy do in Q1, and how do you think dairy is going to shape up for Britannia as a part of total revenues? Because I think in the non-biscuits basket, dairy is one of the biggest products.
Yes. So dairy is the largest category within foods, right? So, and that's what makes it a very attractive category. So, two things that make dairy very attractive. One is the size of the dairy market, and second is the health connotations of dairy that, you know, every mother has. Every mother wants to feed their children dairy products. So, with both those put together, this is a category that, you know, a company like us cannot avoid. Just to give you what we've done in the last 2 years, what we've done is we've grown our, you know, the value-added business fairly well, right? So there's a double-digit growth as far as our value-added business is concerned.
In the dairy business? In
the dairy part, right?
Okay.
And what we've also done is we've trailed off our commoditized businesses, like, you know, ghee, which is, you got to fix rates every day, and, you know, you got to buy it at a certain price, sell it at a certain way. It's almost like, you know, a commodity sale. So we've trailed off those businesses. So as a result of that, what you're seeing is, you're not seeing a large growth as far as dairy is concerned. I'm not saying that it's a blockbuster. It's certainly not a blockbuster. I do think that we can do a lot better in dairy. But you've got to remember that currently we are only doing a trading model. We are, you know, we have a contract packer who does, or many contract packers who do products for us. We brand them with our, you know, Britannia brand name, and we sell it in the market. In the dairy business, to be profitable, you need to own your back end. And also you need to do a lot more innovation than we've done, which will come once we have, you know, dairy, and once we sort of get into value-added products and we do a lot of R&D work, etc. So that's what we are looking forward to. That